Welcome to the Fintech Files version 2.0. In this episode, I have the pleasure of speaking with Jim Osman. Jim founded The Hedge in 2005 after a career in trading and portfolio management. The Hedge is a research boutique specializing in sourcing special situation investments such as spin-offs and activist ideas. In this new edition of the podcast, we'll separate the conversation into two parts. First, we're going to talk about career, and then we will break down a specific topic. And it's not a surprise, we will go for a deep dive into special situation investing because there couldn't be a better guest to discuss that. Jim, welcome to the Fintech Files.
Thank you, George. Good to see you. Yeah, looking forward to what you got to ask me, and hopefully I'll give a little bit of value to the listeners.
I'm sure you will. Can I just ask, as an introduction, to tell us, what your current position is and tell us about the Hedge Group?
Yeah, so I run a firm called, as you say, the Edge Group, and we look at special situations and company change. We've done that for 14, 15 years. Keeps creeping up on me, but yeah, I mean, for want of a better term, I kind of run the show, but we have a good team of people who are good at different things, and together we provide ideas to the investment community and money managers, also from the largest investors out there to the smallest investors.
Great, and we're going to go a lot more into the detail into that. But first, I want to start from the beginning. How did you get into financial markets?
Yeah, absolutely. This is always the boring bit for the listeners because no one really cares about what you did or what you done and how successful you were or were not, right? They want to know how they get in. And I know you mentioned there's some young people out there. My whole life's been a hustle, to be fair. I didn't grow up in any particularly rich or well-to-do neighborhood. We had to work hard and hustle our way, and the city for me in the UK was always a kind of, it was like, wow, those people, what do they do? And it was interesting. And my structured brain, and it still remains today, looks at why things happen and what and should they happen. It was, looking back, I didn't know at the time, but looking back, it was very contrarian thinking. It was like, well, if everyone's doing it, I don't want to do it. Why should I be doing it? That's kind of brought forward today, but it was always amazing me on, why stocks would move and why companies would change and that sort of stuff, and corporate raiding back then and all that. And, you had the iconic film in 1987, which was sort of around about the start of my career of Wall Street. And we all know that story. And it was just categorized everything that was around that day in greed. And you got to admit, and I admit that, we got caught up in that, in being greedy, because still today you see investors greedy, and that's never going to change, and that moves miles. So it prompted me to get into that. Quick overview, I started with SocGen, actually, big European firm, banking firm, still around today, in the back office, checking trades. And again, like I say, my whole life was a hustle. I hustled to get in the front office. I hustled to give my degree at London Business School, and eventually, trading one of the biggest option books in Europe. So background in derivatives, then I started getting a more special situation. I was like, again, that question in my brain as to, why things happen, and the more interesting stuff of the financial markets, where company change and spin-offs and breakups, and that prompted me to get to a hedge fund, and then I was running a hedge fund, and ultimately, I just thought that there just wasn't enough for me for what I was getting from the street in terms of analysis, and I knew these things, these situations of breakups, things like that, were particularly good if they were worth investigating. So I started the Edge.
This move from back office to front office is actually an interesting one, because it's the perception that you can start in back office and never manage to jump to front office. So how was the move from back to front for you?
It was rough to begin with. They told me, Jim, just shut up and do your job. In fact, let me tell you a story, George. I'm writing a book at the moment. One of the things I distinctly remember going to SocGen when they employed me in the back office, it was the executive director, and he actually said to me, and these were his words, he said, Jim, I don't like you. He said, but that's beside your ability to do the job. And he employed me. So I think generally that's been my whole career. And people, some people, hopefully, not everyone, but some maybe don't like me, but they just appreciate that I'm passionate about what I do. And that was the story there. But it was a hustle, right? It was like, look, get me in there. I was moving the tickets from the front office to the back office. Like, let me do something. What have you got? Yeah. So I think Well, there's a big barrier to entry. I think if you're passionate enough and you can show willing, I was in the office first and I was out last, and it was as simple as that. It was the old school thing. And I think if you die for something, you will achieve it. And that's a lesson for your young people, because things are easier today for young people. And they weren't back then. You have to work hard or you get fired. But if you can show that passion as to what you really want to do and go after it, I think there's a lot of value in that. And that's what I did.
Right. And there's another question that actually someone from the audience is, how was the move and how is it different working from a hedge fund from working at a traditional investment bank?
Yeah, absolutely. So traditional investment bank is a factual difference. When I joined the hedge fund, it was a smallish hedge fund, and the contract was if I was ever down 1% in a month, they have the right to fire me. And I went, okay. Well, I went for it, right? Because I knew my ability. I don't think I was ever down more than 1% anyway. Your life's on the line in a hedge fund, and I think you can get attracted by a lot of things really, but it is very, very difficult to manage positions, manage risk. And I'm always on my Twitter account and I'm always saying to people, it's not about P&L, it's managing your emotions and it's about managing risk. If you can manage your emotions, like yesterday, the world has fallen apart in the markets. You could have sold everything and now we got bounced back up and everything's okay. So, you can see that emotion. If you disappeared off the face of the earth for a day, you wouldn't know anything that's gone on. The difference is with an investment bank, you're obviously getting paid and you're getting a salary and all that. And I think your life's slightly more on the line on a hedge fund basis because you have to perform. And I think that the people out there, if they really want to go for it and they believe they can perform and they got it inside of them to do that, then go for that sort of lifestyle. But it's a lot more pressure, I'd say.
My personal experience in investment bank is that there's also a lot of politics and other consideration that will progress your career.
Yeah, I think it depends on the size of the hedge fund, of course, but I think certainly in investment bank, you're right. I mean, it was rifled with politics. I mean, look at me, right? I'm kind of a maverick. I always have been. They hated me, and again, I think one of the things in my book as well, they said to me once, Jim, we would fire you, but you do well for us. So, that's the way I am. But, I don't care for politics. I was never that guy who's going to be, running everything because I just don't care for that sort of path. I care for performance. I care in making things happen and for our clients, making them win. And that's always been my passion, really, George. And like I say, I used to get up off the desk. Everyone used to be sitting there, and I go, well, I'm going home. And the boss was in there, and they were sitting there because the boss was in there. And I was like, well, I'm just going home. I don't know what you guys are doing. They'll look at me, and they'll be like, and when the boss wasn't there, they'll all be gone. So, it was. I just hated that stuff, and I still do today. So, if you're trying to hide, then go to an investment bank and hide. And if you're good at politics, then great, go for it. I want to win. I want to make some money. I want to make some money for the clients. And that's my passion. So slightly different attitude, I guess, George, rather than it's your attitude towards life. So I never really fitted in investment bank culturally wise. That's not me, but I performed and that was it.
I think there's so much stories that we will need to tell. It's not the purpose of this podcast, so we'll have to move on, but I'm very excited to hear about the book.
I'm documenting my book as well, and you'll be shocked at some of the stories, actually, what happened.
Amazing. It's a pity that we have to move on, so I want to move now to the Hedge group. So what made you take the step, and also how was it launching your own business after working for so many other organizations?
Yeah, I mean, it was right at the time because, the research from the street, and I still believe the research from the street is just awful on any sort of special situations because it takes a lot of effort to really find them, drill down, spot kind of the edge, and that's where we've got our name. I always think things need an edge because you need to survive in this world, and the street research just wasn't cutting it. So I launched that and said, look, you know what, we can do it better. I can do it better because I can see things that other people can't see. And what I need is some smart people around me, which I have today, and smarter than me actually, to say, Jim, what you see is a lot of rubbish, or actually what you see is pretty good. And what I tell them is, I'll have 10 good ideas, maybe 6 of them be awful, but they test me on them, or 8 will be awful, so 20% of them be great. and they say, yeah, this is great, let's go with that on this particular angle of this situation. So we developed a firm where, you know, we can analyze all the spin-offs, all the special situations, find these kind of transformational changes going on at the moment, which is interesting, and making them into investment opportunities for money managers. And it just takes a lot of effort, really, and I just don't think you can get that anywhere else. And that's why we got a business, I guess.
And also an interesting choice from you was to set it up. Can I say it's a subscription business? People pay to get your ideas, whereas a more traditional path for someone who was trading a hedge fund would be to launch his own fund. What is it something that you were considering, and what made you choose the?
Well, I think there's a couple of things there, George. I think launching a fund is kind of a little bit of a pie in the sky thing for most people, right? Look, let's go and raise some money. Give me some money and I'll go and launch it, right? Look, very few people are going to give you any sort of money without a track record. It's going to take you 2 years. It's going to take you some great performance, and even then, they're going to give you a little bit more, and you're going to have to build that. And it's not as easy as it was. So that's very, very difficult to do that. So I've never really gone down that path. You know, we can talk about what we do personally in a minute, but I just had a passion for helping people and winning, and them winning, really. And we've had a lot of wins basically on the research side, and more latterly the activist, where we've found activist ideas that have been executed in the market. And nothing makes me more satisfied when we suggest something and it gets executed in the market, because I know we win, the client wins. So not really progressed that. I think it takes a lot of effort, to be fair, and a lot of money. And you know what, it's there's a low probability of actually winning in the end of it. But you know, maybe someone would tell you different.
Yeah, no, it's an interesting. I think pie in the sky is a good expression. I actually know of a few friends who have. It seems to be the glorious thing to do, and I know a few friends from the investment industry who have decided to go on that path and realized it's really, really hard, despite years experience, track record, whatever connections. Eventually, it's also probably not the best business for everyone.
Exactly. And do it for yourself, and you get all the money, and you got no hassle from investors, right? You know, why not? I've been doing it for years. I'm happy. You know, I've got no one ringing me up telling me why didn't I buy Apple or whatever, you know what I mean? So, you know, sometimes a bit of security as well, you know. People like to do it because they think there's big money in it or they want to get rich. And that's just not the goal. It's never been the goal for me. Success has been making people successful, making clients successful. If you have that vision, again, for the young people watching, don't go out there in the expectation you want to make money. Okay, don't do that. And you know, just go out there. You want to be successful. That's what you want to be. You look at the great entrepreneurs. Look at Elon Musk. You look at the top guys, Bezos. They don't wake up in the morning and say they want to be rich. You know, that's not. And I think that's the driving force. A lot of people want to start their hedge fund. They want the glitzy and they want to be rich and blah blah. It's just not. You'll never do it that way. That mindset will never do it.
Yeah, that was going to be my next question. Your advice. So you've got it, and I think it's something that's perhaps harder to do in the financial industry than something else, because in the financial industry, you're dealing with money all the time, so it's really easy to get like only focused on that. But client relationships and things like that could be a different sort of motivation, as you mentioned, and this seems to be your thing, or client success.
Well, anyone watching should be, or listening should be, you know, what is their purpose? What is their purpose for doing whatever they're doing? You know, my purpose for setting up the Edge was to make people money. Simple as that. And I can do it better than anybody else on our research. Simple as that. And that's my purpose. And that's what I want people to win by. So what is their purpose? Why are they doing what they're doing? If it's to get rich, I'd say don't. But if you really think you've got something that, you know, that other people ain't, then go for it. Launch a fund, because you'll get the money, because you'll be good at it. So, you know, but to set up just a hedge fund because you think you're good at picking stocks long, short, and, you know, maybe it's just like setting up a cab business across the road. It's like, well, okay, people might come and look at your cab and take a cab, but you know what? It's not going to grow. You've got to have an edge in this business, and that's what we have. And I'd say anyone else to starting or doing what they're doing should think similar.
Wonderful. And I want to wrap up this part about the career with a couple of more personal questions. I've seen somewhere that you're into Ironman.
Yeah.
How does that fit into your schedule?
Well, it didn't fit last year. I mean, all the events are off, as you well know, for obvious reasons. So I put on a little bit of weight, so I'm a little bit more weighty this year, for certainly like all of us, I think, eating too many cakes and eating all the rubbish. But usually, you know, I've pretty much done Ironman every year. and all the stuff around that. And, you know, my training was all set out in terms of a program called Training Peaks, twice a day, 6 days a week, 20 weeks a year, building up to it, and then boom. And then, you know, it was a big deal. So getting up very early, doing, you know, making sure your levels of exertion are balanced, making sure your nutrition is balanced. And I like that because, like I say, my structured brain fits very well into that. Put out a plan for 20 weeks, which I do, and I'll follow it to the letter. Had nutritionists guiding me on what to eat and how to better more carbs here, less carbs here, all the rest of it, and making me optimal. So again, if you're structured like that and you can and you want to put a goal in, and I love goals, it's a great achievement. I mean, I slipped into it for a friend, and he basically said, "Jim, why don't you go do a half distance one day, half Ironman?" I went, "Really? Yeah, just do it. I'll run it with you, you know." And we done it. And he went, "Just do a full one." I was like, "Are you kidding me?" And, you know, an Ironman consists of a 2.4 mile swim, a 112 bike ride, and then a marathon at the end. And you are just wasted when you get to the end before you even start. It's a good achievement. And coming off, you know, I remember doing one in Germany and coming into a big stadium, and they say, "This is Jim Osman from England," and it's like the greatest feeling finishing. And there's nothing that, you know, is not more than that. So yeah, look, it's good. I'll be getting back to it next year. I think I'm getting older now. I'm 48. Whether I do full distance, half distance, or sprints, I don't know. But I'm started training again, and I feel good. I just feel good when I'm training. I think it's good for the mind. I think it's good for the body. And, you know, everyone wants to look good as well.
This would be a fascinating separate discussion on how, you know, you manage, because it's also so much time, so much effort, and what impact it has on your personal life. It's actually also a great interest of mine, but I would nowhere near doing an Ironman or a half Ironman.
Yeah.
But let's move on again.
You'd be surprised what a body could do, George. You'd be surprised. When people say no, you'd be surprised how much the body is over your mental state, right? When you get to mile 18 in the Ironman, right, you just survive it on mental ability.
My only experience like that, I did a marathon, which I thought I was gonna die at some point, but somehow put one step in front of another and
That's
keep
right.
going.
Be surprised what the body can do. Can do a lot more than people think.
Interesting topic, but let's move back to investing. And I have one more personal question: is how do you invest your own money?
So I've got to be careful when we make recommendations out there. We've got to leave it at least 7 days. But, you know, I eat my own cooking. My book is filled up of stuff that we recommend ultimately. And, you know, it's a good 7 days after we recommend to the clients, because that's what we have to do as guidelines. But, I mean, ultimately, you know, I love special situations. They make money. Do I have the FANG stocks? Yeah. I mean, I wrote an article on the FANG stocks saying that, you know, the ultimate kicker to that, at the beginning of the year, I wrote it. It's on my Forbes blog. If you type Jim Osman Forbes, you could see it. It's all. But I basically said that the FANG stocks are coming to the stage where they're either just going to continue to grow, but they're also going to break up. Because there's all these things with inside them, like Amazon, like Google, like they're going to break up, and there's 50% upside. They made 25% already this year, or 22, a little bit more back, a bit back recently. But ultimately, the value in those things is the breakup value down the line. So they are, you know, even if you look at FANG stocks and you read my article there, you'll see Amazon got a whole load of things to it. Amazon Cloud, obviously. You got Google, you got Microsoft with WhatsApp. You got all these things that could be spun off. And there's a huge amount of value there within the FANG stocks. So I own those, for example. I'm just going to own those for, you know, forever until they break up, I think. But the other stuff, more regular stuff, you got one that clients will know is Vivendi. Vivendi spun off Universal Music Group. That thing's through the roof today. You know, I own that and a spin-off. And now I've got a spin-off of great company of Vivendi, and I've got a great spin-off of Universal Music Group. And I wrote an article on that about a year ago as well, saying this would happen. So, you know, I eat my own cooking.
So you're not part of those that think you should diversify from your work-related income. You're all in.
Well, yeah, why not? Why not? I mean, someone says to me, "What you invest in?" I say, "Well, none of the stuff that I recommend to you." Well, that doesn't make any sense, does it?
Yeah,
So,
sure.
and you mentioned diversification. I just don't believe in diversification. My book is 12 to 15 stocks of solid names that I believe in and that I've analysed, and that's that. And they might be, you know, there's no diversification in there or considerations in there. They might be diversified just because they're natural, weird sort of industries. But diversification, I mean, yeah, it's not. I don't think the small investors should do it. They need to research some solid companies that they fully understand. They manage the risk, very important. I'm always talking about that on the Twitter account. Manage the risk, not the P&L. And if you can do that, you're going to win.